Good day, this is Shauna Casey, and welcome to this SOS educational webcast, Weathering the Storm, from private company to public company. Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the Questions and Answers panel of your GoToWebcast console, and we will do our best to answer them as they come in. Any questions that we don't get a chance to address during the webcast, we will follow up with afterwards in an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. You can also find the link to the materials under the Event Resources tab on your GoToWebcast console. This session will also be recorded, and we will send a link to the recording and materials in the next day or two. I hope that all of you are familiar with Stock and Option Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. SOS provides interim and permanent placement, expert project resources, and total outsourcing solutions. To learn more, you can visit us online at www.sos-team.com or call us at 408-979-8700. Next, I'd like to introduce you to our speakers for today's session. We are pleased to have Rachel Southorn and Madori Playford on the panel today. Rachel has worked in equity compensation since 2003 and joined SOS as a senior equity compensation consultant in 2013. Rachel supports clients with system conversions and reconciliations, financial reporting, modification accounting, accounting for option repricing, DTA balance verifications, and vendor searches. Rachel's expertise spans from system knowledge to mobility challenges, to taxation issues and best practices in administration and technology. Prior to joining SOS, Rachel was the product communications lead for E-Trade Financial Corporate Services. In addition, Rachel previously developed and reviewed content at the National Association of Stock Plan Professionals as editorial director. Rachel has been a frequent speaker on equity compensation topics and regulations, including webcasts, NASP conferences, GEO and NASP meetings, and the CEPI Symposium. Rachel graduated from the University of Oregon with a BA in Chinese Studies and became a certified equity professional in 2005. She continues to volunteer for the Certified Equity Professional Institute and is currently a member of the CEPI Curriculum Committee. Madori began her financial services career in 1999 at E-Trade. While there, she obtained her broker's licenses, was a founding member, then became the supervisor of the Customer Service Quality Assurance Team. In 2004, Madori transferred to outsourcing, where she began her career in stock administration. Earlier this year, Madori became the manager of the Campbell outsourcing team here at SOS. Madori has degrees in business and human resources as well as a master's degree in management. She enjoys public speaking and has presented at various conferences and meetings, including NASP, E-Trade, Directions, and the CEP Symposium. Next is our standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. As I mentioned, the materials are available on our website, and here again is the link. Thank you all for joining us today, and with that, I'll turn this presentation over to Madori, who will introduce our topic and cover the agenda. Thank you.
Good morning, everyone. Thank you for joining us today. We have a pretty long agenda to get through, which I will go through in just a moment. If you have questions as we're going through the materials, please don't hesitate to type them in the questions section. We will be waiting until the end of the presentation to answer questions. We want to make sure that we get through all of the materials first. At the end, we'll answer many questions as time allows, and if there's questions that we haven't been able to get to, we will send you out email answers, so all questions will be answered. So today we're talking about going public. So you work for a private company, everything flows really well, and the decision's made to go public. What happens next? Well, a whole lot happens next. And so we're going to try to cover as much of that as possible. Today we're going to start with data reconciliation, then we'll go to broker selection, software selection and doing a conversion, selecting your transfer agent, compliance if you have international employees, payroll, an internal review process, ESPP, employee communications, and then a summary of all of this information. So data reconciliation. It's, of all the things that you'll do as you're getting ready to go public and go into the IPO process, data reconciliation is without a doubt the most important. The integrity of your data is only as good as, let me put it this way. One of the definitions for integrity is sound, unimpaired, or in perfect condition. When we speak of data integrity, we are talking about data that is accurate, it is complete, it is whole, with no incorrect or missing elements. So again, the most important thing you'll do is make sure that you've got data integrity before you start doing conversions into software and moving through that IPO process. Documentation. What's the condition of the documentation that you have to back up your data? Your cap table, board minutes, grant agreements, exercise notices, they should be complete in a central location and easy to access. If there's one thing that I've learned over the years, it's taught me that the older the data, the less likely I am to find the backup to go with it. So if you have that opportunity to go through, clean up your data, scrub it up, and also locate the backup, you'll be starting off from a much better place. You also want a good HRIS system with complete data. If your Human Resources Department keeps your data complete and up to date, it'll make your job easier. You need that reliable source for acquiring new hire data and any updates to data for existing employees. Having incorrect or missing information, it can prevent brokerage accounts from being created or activated. It can cause incorrect numbers in reports, and it's an impact to your data integrity. So you want to make sure that you really build a strong partnership with your HR department and the information they have in their HRIS system. So one of the things you'll want to do is audit the data in your equity system, or if you're still on spreadsheets, in your spreadsheets with the HRIS system before going public to make sure that those two systems are in sync with each other. And I know there's a million and one things to do. I've been there, done that, but I can't stress enough the importance of syncing your data. You need to make sure that your employees, the names match, the Social Security numbers if applicable, address, employee ID, all of that needs to be in your HRIS system, and that same matching data should be in your stock database. If there are discrepancies between the two systems, then you should be reaching out to the employees to confirm the correct information. If you've been managing your cap table in Excel or in a database that only works for private companies, you'll want to convert to a platform that works for public companies. This is another reason why having an HRIS data and stock data match is important. Then if you're also in a company that has international employees, that's going to bring some additional issues to the table. There are many countries out there that have very stringent data privacy laws. EMEA, for example, Europe, the European Union has some very, very strong data privacy laws. So before you give the employees a grant or create a new brokerage account, you are required to get their permission to use their data. Some companies will add data privacy language to grant agreements. I've worked for companies for years that have done this. But if you want to be ultra-conservative and absolutely ensure that you've met the data privacy requirements, you may want to have any new employees sign a data privacy permission form before you give them any new grants or create brokerage accounts for them. So now I think, Rachel, you're going to talk about broker selection.
Yeah, so if you're planning in an IPO, you need to not only have a broker, but also a good record-keeping database or software platform. And a lot of times these go hand in hand, but not always. So I'm going to talk a little bit about brokers and software or platform sort of in conjunction, but keep in mind that they might not be the same. Now, if you're not already on one, say you're managing everything in Excel, now is definitely the time to do a solid RFP. And even if you're using a platform currently, you really should evaluate your options and determine if that same platform and or broker combination is right for your company in a post-IPO environment. And you should also already have a transfer agent. But again, if you don't, you will certainly need one going forward. So before beginning the discussion on broker, software, or transfer agent selections internally, it's really important to assemble a team of decision makers. And I think you're going to hear me say this more than once. But everyone who has a vested interest in using not only the platform that's selected, but also the transfer agent reporting, and also someone or a group of people who can represent your employees' needs when choosing a broker, are all important to get together and make decisions on what you're going to use going forward. Because again, when you move from a private to a public world, everything gets magnified. It is a force magnifier for anything that you've decided pre-IPO. So in most companies that I've dealt with, the directors and officers are permitted to select an outside broker. But the rest of the employees are set up with what's called a captive broker, meaning that they'll all use the same broker for their transactions. That isn't true for all companies. Some companies allow selection, but you need to check with your broker and or platform to see if it's even allowed, because not all brokers and or platforms will allow multiple selections or alternate broker selections for anyone other than officers and directors. You'll also need to consider how your company is going to approach 10b5-1 trading plans, and these plans are designed to allow your Section 16 insiders to transact, or well, your insiders to transact in shares without violating insider trading regulations or even your company's insider trading rules. And it's a good idea to, at this point, review your company's insider trading rules. If your officers and directors are going to be allowed to select their own broker, it's important to touch base with that broker and just review what the plans might look like to make sure that that broker can handle the complexity of the plans that your insiders are using. We're going to allow non-directors and officers to use a 10b5-1 plan, particularly if you have insiders, people who have access to inside information, who are not directors and officers. You'll want to touch base with if you're using a captive broker, if you're making the decision to have your rank and file use the same broker, which really does streamline things. It's important to touch base with them and see if they have a team, most if not all do, who can handle 10b5-1 plans, how they manage it, and how they ensure that the transactions go off without a hitch, and what the end employee experience is going to be. Are they going to have a different phone number, for example, to use if they need to have help? And you should also speak to all the brokers impacted about Rule 144 reporting. The other consideration for brokers is, in fact, the employee experience. Up to date, I mean, as a private company, your employees are most likely coming directly to you for anything that they need with questions, if they want to exercise their shares, and if you've had any sort of tender offer or private sale situations as a private company, they're coming through you. When you become public, you're going to move that out to your broker and or software platform provider. And so you want to understand what that employee experience is going to be. Even if you're going to stay where you are, your employee communications are going to rely on you specifically understanding what that interface is going to look like. So you'll want to get a demonstration and understand the broker availability in all locations where you have employees that are participating in a plan. Understand when employees can call in and how they can call in, particularly internationally. And again, regardless of whether you're going to choose a new platform or decide that your current platform will serve you well as a public company, you'll really want to bring the teams in on the discussion that are most impacted on the decision and are going to be required if there's any conversion that takes place. So I'm going to talk a little bit about conversion on the assumption that you might convert. But even if you don't have an actual conversion, sometimes there will be some conversion elements when you move from private to public. And the two teams that are most likely going to be your most vigorous users of the platform and the reports it produces are your payroll and your finance team. So if your payroll and finance team don't have anybody that can participate regularly as you have discussions with either your current provider or the provider that you're converting to, make sure that you have time to sit with them and get a list of important questions, but also the data that they're going to require, including the format that they're going to want to see their data in, because you want to make sure that the platform you choose as a software or an online platform is going to be able to either already produce the data in a format that both your finance and payroll can use, but also or be customized to deliver it. Or maybe you need to get your tech involved in creating an interface that will get that data for you. The other thing that you'll want to do is, with your platform provider, review the types of equity vehicles that that platform can handle. And this is your opportunity to include any awards, not just that your plan, not that you're currently offering, but that your plan allows in the event that you make a decision later to include new kinds of grants that you haven't in the past. You don't want to be caught unaware that your platform has a problem handling that. So now, before things get intense, is the time to have those discussions. In particular, your finance team is going to want to know how that platform handles, for example, non-employee grants, the accounting for that, and performance, and modifications, because these are the situations that may have already come up, but may also come up in the future. And platforms are very different in the way that they handle those three things. And you'll want to understand how your platform or how the platform you're choosing is going to handle that. Now, if you're converting to a new platform, or if there's some sort of conversion element to move from private processes to public processes, keeping in mind that that conversion centers around the difference between having paper exercise and having an actual market transaction take place. So things will change whether you choose a new provider or not. But you'll want to assemble a conversion team, and have that completed well in advance of your IPO to give not only your internal teams but also your employees the chance to acclimate and work out any kinks that you find in your processes. And in the conversion, identify each step of the process and schedule it out with specifically who will be responsible for the data and the data reconciliation. And be sure to keep all of the reports and the reconciliations in a central location. As Madori said, this is essential not just for your data before your IPO, but your data in any sort of conversion and in any IPO, because your auditor will request some or all of it at some point in time. Madori, did you want to talk about transfer agent?
I did, thank you. So choosing the right platform for your stock and the right broker for your employees, those are very essential things in the whole process of going public. But believe it or not, your transfer agent is just as important. Having a transfer agent that can meet your needs, it's as important as having the right broker. A good transfer agent can make the transition from private to public. They'll make it easier. When looking for a transfer agent, determine what you need, what your broker requires, and ease of use. Book entry capability. I love book entry capability. If you have certificates floating around everywhere, gathering them up can be a time-consuming, frustrating, and costly experience. I know, I've been there, I've tried to do this. But if you select a transfer agent that can take your cap table and create book entry accounts for everyone with shares outstanding, then you can just cancel all of those certificates. People don't have to find them. They don't have to replace lost certificates. And you don't have to go on a wild goose chase. So I'm all about book entry capability. And as with the platform, you'll want a conversion plan. It's just as important as with the broker platform. There may not be quite as many steps, but at the end of the day, it will make life much easier. So there will be an initial conversion at the beginning if you do decide to put shares in book entry form to get all of those book entry accounts made for everyone that has shares and getting those shares in there. There will be setting up the new plans and the pools for the plans so that once you go public you can settle exercises or releases through the broker. Some of those basic things that set up. And then if your company, should they decide to do a second offering, or if at some point in time after the lockup period is closed, they decide to do a bulk transfer to the broker, all of that will be much easier to do and ready for you if you've worked with your transfer agent, set everything up the way it should be, and your transfer agent has that ease of use that I mentioned and works well with the brokers. So now it's on to international compliance. Rachel, you have some information for us?
Before we move on to that, I just wanted to make another side note about your transfer agent selection with regards to IPO. Not necessarily the selection, but something to keep in mind is whether or not you are going to move your either book entry or, if you still have them, stock certificates. If you're going to move those shares, the representation of those shares, over to your broker. And if you are, what kind of permissions you need from your participants, and what you'll do with terminated employees or future communications. Because a lot of times the broker will work with the transfer agent for that initial transfer of shares without incurring fees. But if your employees do not participate or do not give their permission initially, then you'll have to decide how you're going to communicate with them on that and whether or not they're going to be responsible for any fees incurred to transfer those shares. And international and international compliance, well, is really a bit of a headache whether you're a private company or a public company. And if you have international employees, hopefully you have already done some of the things that you need to do for an IPO. But it will get more complicated to maintain, not just as you become a public company, but as you grow and as you introduce perhaps new plans, new equity vehicles, or new jurisdictions. So I would recommend that your company legal team establish, if they haven't already, a relationship with an outside legal team that specializes in international equity compensation that can provide you with advice and assistance for your international compliance. An outside legal team should have the expertise to give you country-by-country review of both the filing and reporting requirements, as well as payroll considerations for each country in which you currently have an employee population. And I say it that way because it's not necessarily just where you are currently offering equity. With every piece of this process to go public, it's important to consider the downstream effects. You may consider offering equity in these countries in the future. So make sure that as you're choosing your teams, just like you're choosing your broker or your software or your transfer agent, that this team is able to help you down the road should you make other choices than you have currently. It's also not a bad idea to review countries where you are considering having new employees, if there's new markets that you're going to move into. So in addition to your current equity grants, you should discuss the pros and cons of establishing your employee stock purchase plan if you're going to establish one. And I'll talk about the ESPP a little bit more in a minute. But right now, specifically with international, it's important to discuss with an outside legal team that specializes in this the pros and cons of offering a stock purchase program in each jurisdiction and any sort of landmines that might exist for offering a purchase plan in those jurisdictions. And also review with them what kinds of equity awards would be most advantageous, both from a compliance standpoint as well as from a cultural standpoint, so that you're prepared not just for the grants that you have now, but the grants that you might give in the future. And this is the opportunity you have to review your grant agreements and your plan documentation and decide if there is maybe a more efficient or more effective or more compliant way to do your grant agreements. We don't have time necessarily to discuss all of the things that can go into the decision about grant agreements, but it's important to bring up that discussion because there are a lot of choices. And hopefully, again, you've already had some discussion about this because there is international compliance for private companies, but everything will grow as you go public, including payroll. So you'll most likely be interacting with your payroll department on a daily basis going forward. In the past, or currently as a private company, obviously you also are interacting with not only your U.S. payroll, but perhaps your international payroll. But as employees are able to transact on their own independent from any interaction with you, you might end up seeing transactions come in on a very regular basis. So it's important that both the stock administration and payroll understand all the international tax rates that need to be applied and make decisions on what tax rate to apply if you're not going to be using the tax rate that's the individual tax rate for each kind of transaction. Your outside legal team should be able to review this information with you as well as your payroll software provider because you need to be sure that you can get the correct data in to your software provider and or providers depending on whether you have a different provider internationally or providers. So U.S. tax withholding is another important area where the tax rates need to be agreed on both by payroll and stock administration. And you need to establish the process for providing tax withholding information and assume that at some point it will be on a daily basis to payroll after the transactions have been processed. And this may be not immediately, but at some point should be an automated process. It's also your time to discuss what you're going to do if there's a discrepancy because you will need to have your HIS data into your stock database, but also your payroll data. Your year-to-date information is really important so that you don't end up with an over-withholding of Social Security or other taxes that have a maximum withholding rate, both domestically and internationally. So odds are at some point there will be a disconnect. That year-to-date file won't be current. Something will happen in the meantime, and you should discuss in advance with your payroll teams what to do in those situations. Will you take that over withholding and put it, for example, in the U.S. into federal tax withholding? That's a very common way to handle it, but it should be established up front what to do if a transaction has, for example, Social Security over withheld. What's the payroll department going to do so that it doesn't come up as a surprise and a shock if and or when it happens? It's also a good time to review your plans and your fair market value with regards to what the income amount is going to be, particularly for restricted stock, and review with your payroll team how you plan to stay in compliance with the timing of sending in tax to the IRS, tax withholdings to the IRS, particularly when it comes to restricted stock. And I think I should have advanced that slide. Sorry about that. Internal process review.
Yes, so at the beginning we talked about data integrity and how important it was that you start out with clean, well-scrubbed, complete and accurate data to move forward. And you don't just start that way, you have to keep going that way. And so that you need to catch things before, if something happens to your data, you need a way to catch it so it can be fixed so that your data integrity remains intact. Because I guarantee your auditors will be looking at that. So the best piece of advice that I can give you when you go public is to audit, audit, audit. We're all human and we'll occasionally make a mistake. I know over the years I've made my share, but some mistakes are easier to fix than others. The grant process is one area that a mistake will draw unwanted attention. If your comp committee is approving a grant sheet with new grants on it that is either missing someone or includes a grant it shouldn't have, you can't just fix that after the fact. You're going to have to write it up and have your compensation committee approve whatever changes need to be fixed. So that's not the kind of attention you want to draw from your compensation committee. I know this was years ago, a company I worked for, there seemed to be a series of mistakes in the weekly grant sheets I got. And it seemed like every couple of weeks I was having to go, our CEO was a committee of one for approving rank and file grants. I was having to go to him and say, I need you to sign this. There was a mistake on last week's grant sheet. And one day he just looked at me and he goes, what are you people doing? And I felt like a deer in the headlights because I was just bringing him grant sheets that was generated by our HR department to sign. And he then apologized. He said, I'm sorry. That's not the question for you, but I will get to the bottom of this. So again, work with your HR department, come up with ways to audit grant sheets before they go to make sure that they've been reviewed against the offer letters, against your HRIS system if grant information is put in there, to make sure that that information is accurate before you take it to your compensation committee. Exercises can also be challenging to fix mistakes. Now, if you find it right away the day the exercise happens, generally that's going to be a much easier fix than if you're in all the way to settlement date or even past settlement date. So having a second person review exercises before you send the information to the transfer agent and broker, it's not only going to save you a lot of time in the long run, but it could save you money. And in some cases, large amounts of money. It's important that the correct number of shares exercised, the grant price, and taxes, if applicable, are correct. If you have to notify an employee that you're busting their trade, reversing the exercise, that's not a fun discussion to have. And if the stock price goes against them before the exercise can be corrected, your company may find themselves in the position of having to write a very large check. So again, having that second set of eyes, having that audit will save you a whole lot of grief in the long run. Now, late terminations. Late terminations are one of the most common issues in stock administration. It happens, and it happens frequently. And it's one of those things that you come up with an audit process to try to prevent it. You train your HR department to understand what can happen with a late termination, that options that should have been canceled can be exercised, that RSUs that should have been canceled, releases can take place, ESPP purchases can take place. So it's very important. Use this time to educate your HR department or departments. I find with late terminations, you can usually bring your U.S. HR on board fairly quickly and easily, and they'll understand it and they'll get this information to you. But you don't always have the same speed of understanding with if you've got international employees. Between having HR groups in other countries where you've got English as a second language and maybe not a real true understanding of how the equity process works, they may not see the importance of sending terminations in a timely manner. So you can, this is the time to educate and help to bring them on board. But you should also be doing an audit, I like once a month, but at least once a quarter, where you gather up all of the terminations in the HRIS system worldwide and make sure that you've got those matching terminations in your stock platform. That way, if there is one that fell through the cracks, you're going to be catching it within a few weeks to a couple of months at the most. The accounting process. So once you move to working with a broker and having automated exercises and automated releases, money is going to start coming in by wire to your company. And it's going to be those exercise prices for the options and the taxes for, if applicable, for the options and for the RSUs. Your accounting is going to be seeing these wires, and they're going to need to know how to enter this money into the general ledger, how to do the journal entries. So you need to work with your accounting person that is getting those wires and journaling them, and set up an audit, again, monthly, quarterly, to make sure that all the money that has come in matches what should have come in based upon reports in your database. And, making sure that data has been captured and is correct. Sometimes there will be a discrepancy if you have a transaction the last couple of days of the month. The wire may not have arrived when it's time to close the month. And so there will be a discrepancy. But noting that discrepancy and ensuring then the next month that it has cleared itself up will, again, will keep everything in balance, so your checks and balances. Also with payroll, the IRS has a $100,000 rule. So basically if federal taxes, your federal and social taxes add up to more than $100,000, those taxes have to be paid. And so if you have a good exercise audit process in place, you can catch that $100,000 rule and let your payroll know that you've hit that threshold and that taxes need to be paid before the next regular scheduled payroll period. And then by the end of the year, you're going to want to make sure that all stock transactions, including exercises, releases, disqualifying and qualifying dispositions for ESPP, all of those numbers should be in payroll. So I would recommend at a minimum a quarterly audit. And again, there is some auditing going on when we're reconciling the dollars. To make sure that payroll has captured all of that data, and then a last year-end audit to make sure that all of the totals in payroll match what's in your stock database. If you have regular audits throughout the year, then that last year-end audit will go much faster and smoother because hopefully you'll have everything captured up until just the last couple of months of the year so that you're looking at a much smaller selection of data than if you try to look at all 12 months at once. Oh, it's time for ESPP implementation.
Yeah, so going IPO or becoming a public company is your big opportunity to offer a tax-qualified employee stock purchase plan in the United States. And you'll probably find that your ESPP or your employee stock purchase plan is very important to your employees, especially if your company does not provide equity awards across the board to all employees. If that's the case, it may be the only opportunity for ownership for your employees to participate in ownership of your company and to buy that stock at a discounted rate versus going out into the market and just buying stock. But there are a lot of considerations with employee stock purchase program, and for this I'm mostly going to just talk about assuming that your ESPP is tax-qualified program in the United States. Before the program is announced to the employees, make sure you understand very specifically what your purchase period or periods are and what your offering period or periods are. You may have a purchase period that includes multiple offering periods, and you may have concurrent purchase periods that participants can participate in, or maybe just one purchase and or offering period that participants can enroll in. So taking your plan document and really discussing it to understand the ins and outs is important, but also discussing with the broker and or software provider, platform provider that you're engaging for your public company experience is important so that you understand how the data goes into the system, what kinds of inputs that you need to provide, but also how the data comes out of the system. And as you're going forward into the IPO, discuss what your very first offering period is going to be. Because the difficulty with that very first offering is if you want your offering period to begin on your IPO date, you're going to run into the difficulty that the enrollment can't begin before the actual start date of your first offering period. Going forward, you can have employees enroll in advance, during the current offering period for the next offering period. But that very first one, you have a timing issue. And so it's very difficult to give employees the opportunity to enroll at the beginning of the offering period if your offering period starts on your IPO. And there are ways around that. There are creative ways around that I wouldn't necessarily personally agree with, but there are also some standard ways of automatically enrolling your participants at a certain level to get everybody enrolled in your ESPP in advance. But anyway, discussing that very first offering period is important and deciding how you're going to handle it. It may be in your best interest to put off that initial offering period to sometime after your IPO, particularly if you want a very specific set of dates, say June and December for your purchases, and you're planning on going IPO in March. It might seem best to go ahead and put off that first offering period. And Madori is going to talk about communicating your plans in just a minute, but it is important that you understand how you're going to deal with the purchases on a database level, but also on an employee level. So the other part of ESPP is that, very similar actually to restricted stock, we have the issue of needing to have a brokerage account established. So to take a little side trip down restricted stock lane, your employees will need to have a broker account to receive restricted stock shares. Unlike options, they're not going to do anything to get those shares, and most, if not all, brokers are going to require an active account to deliver shares, particularly if you're going to sell shares to cover the taxes. So side note on restricted stock. But when it comes to ESPP, your participants, again, are going to need an account so that the shares that are purchased automatically for them by virtue of enrollment are able to be delivered. Now, a lot of brokers and or software equity compensation platform providers have an enrollment feature inherent to their offering. And if they do, that's a great way to make sure that your employees go through the process of activating their brokerage account, because they may need to do so in order to enroll. And on that note, they may need to do so in order to withdraw or change their contribution amounts. Again, it's really important that you understand how that interface is going to work, not just from a data perspective. How are you going to get any changes that the employees make from that interface and into your enrollment or your equity compensation platform that's tracking the ESPP, but also to and from your payroll so that the deductions can happen properly. In that process, the data flow needs to be very clear, but also it needs to be very clear to employees how they're going to interface with that user experience. The taxation, again, Madori is going to talk about how to communicate to your employees in just a moment, but it's important that the employees understand taxation of the SPP. Similarly, you're going to want to make sure that they understand their ISO taxation, if they have incentive stock options that they've exercised, particularly if they've exercised it prior to IPO and they're very excited about selling it once there's a public market. It's important that they understand the difference, or that there is a difference between a qualified and a disqualified disposition, and what to expect for the ESPP, that they're going to have payroll deductions. And depending on how much time you have, it's important to talk about the limitations you're going to put on your ESPP deductions percentage-wise, and the order of events for deducting from paychecks. So if there are obligatory fees that you might have within your company, say for insurance or other kinds of professional and or company fees, will those come out before or after your ESPP contributions? You can get really granular with your payroll, but basically you definitely want to know that you'll be able to get the income and or tax withholding information to it. So when it comes to ESPP, you want to make sure that you're getting the deduction information correctly to your payroll and the contributions from your payroll before you make an ESPP purchase. And you get to communicate to your employees about all of this. Madori?
So as if we weren't busy enough cleaning up our data and setting up new platforms and learning how to use new brokerage accounts and transfer agents, we also have to take all of this information that we've been learning over the last few months and put it in a simple, easy to understand, easy communicate form to deliver to our employees. So it really, as you're going through this process, you really do feel like there's just not enough hours in every day. But it's important, when you're private, chances are your U.S. employees are getting incentive stock options, any international employees are getting non-qualified stock options, and that's it. Now all of a sudden we've opened up to a world where there's not only ISO and NQ options, there's restricted stock awards and restricted stock units and performance stock units and ESPP, and it's a whole new world of equity that's opened up. You need to find out what your company is going to be granting as their key forms of equity and make sure that you create employee communications to help your employee understand what those types of equity are and how they work. So, you're going to be crafting communications on how exercises will work with a public company, the awards, are there going to be releases, are there going to be ESPP purchases? And you may not always have the responsibility for all of these communications that come out, but take on the responsibility of making sure, if you're not writing and delivering the communications, but at least take on the responsibility of making sure that the communications are being written and delivered, that there's not something being left out that should have been included. For example, your legal department they're going to be responsible for your insider trading policy. So they should be communicating that insider trading policy, and not just to insiders, but to all employees of the company, because even if you're not on an insider trading list, if you've overheard something or you've seen something that is material non-public, then you have that responsibility to the company to not break the law and trade on that. So all employees need to understand the insider trading policy and how it works. You also need to understand who's responsible for keeping and maintaining the insider trading list. Is it going to be legal that is keeping that list up to date? Are you going to be keeping that list up to date, or is it going to be someone else in the company? So that you understand who's responsible for maintaining the list and communicating to employees that are added, deleted, or deleted from the list. Also, with new brokerage accounts, and all of a sudden, instead of filling out an exercise form and writing a check to exercise, you're logging into an account and using an electronic platform to exercise your options. That's a very big change. So if you can, invite your broker to come into your company and do some training and presentations. They can talk about how the brokerage accounts work, provide some basic training on how to do an exercise, what services the broker offers. Are they offering any additional services other than just the basic ones for exercising or receiving shares from releases or purchases? And they can go over what fees, because even though you as a company are paying the broker to use their service, the employees will still accrue some fees, some commissions and other types of fees. So that way the broker can help the employees understand exactly what's going to happen when and what it's going to cost, if anything. As I mentioned before, if there's any new types of equity awards or plans, make sure that the employees understand that information. If there is a new plan and prospectus, post that someplace where employees can access it, either on an internal website or through maybe a company library at your broker, or on your, if you need to, email out links, but let the employees know where they can go to get information about the new plans. One of the most frequent questions that I've gotten over the years when I'm working pre-IPO is, okay, I did an early exercise. What happens to my shares? how is this going to work after we go public? And so it's making sure that the employees understand, okay, what happens as your shares vest? Where will they be? How will they get there? When can I sell them? So answering those questions for employees, communicating that if you've done an early exercise, as your shares vest every, however often you decide to do it. With me, it was once a month. We would move vested shares over to employee accounts. Some companies may want it to happen daily, but I don't recommend that because when you DWAC shares, there tends to be a cost involved associated with that. So help your employees understand that as their early exercise options vest, where they can find those shares and when they can expect to see them. Also, make sure that you're keeping all of these shares in balance. You'll want to, on a monthly basis, compare your stock database with your transfer agent database and make sure that as these shares start moving from the escrow accounts into the employees' accounts, that they're being tracked so that when you do a monthly roll forward, you can track all of these shares. And again, this is a part of your data integrity and keeping all of your data well scrubbed and clean is making sure that you're tracking these shares correctly and having your reports there so should the auditors ask, you can provide that information. Well, now, go through a quick summary. So now that everything has changed, you may be using a new stock platform. All of a sudden you're working with a broker. There's transfer agents involved. You may be going from paper grant agreements to online grant agreements. There's whole new ways and types of audits that will be required. It can be overwhelming. It can be kind of crazy and kind of busy, but if you have good audits in place, develop good internal controls, have a strong employee communications program, and develop strong working relationships with both your internal partners in HR, legal, tax, finance, accounting, but also your external business partners. Develop that relationship with your broker, with your transfer agent. That will make life easier, and you can get through these processes faster and easier. They'll make sense, and most importantly, if you've developed these processes, if you've developed the audits, if you've developed the relationships, then once a quarter when the auditors come in and start asking to see information, you can, with assurance and confidence, hand them that information and know that everything is going to be exactly where it needs to be and it's going to be correct and your auditors are going to sign off on it and be happy. Now this does require a change in administrative mindset. All of a sudden, we tend to be friends with our coworkers and we get along well and we like each other, but all of a sudden that relationship is going to shift a little bit. We're still going to be friends and we're still going to get along, but we really have to work together to make the equity program successful. And it's a strong communication, sitting down with your groups, either all together or one at a time, and explaining how the equity process works, how the audit process works, what the auditors are looking for, comparing your SOX narratives between each of these groups to make sure that they tie together and that are in line will really help as you're putting all of these new changes and new processes into place. Your data accuracy, all of a sudden it's real time. When you're private, you can get an exercise slip and a check and lay it on your desk or lock it in your desk drawer, and 3 or 4 days later, give the check to your accounting folks and enter the exercise into to your database or onto the spreadsheet, and everybody's happy. It works because there's no need for real-time updates. When you're working with a broker, everything all of a sudden is in real time. Make sure that your employees have access to their data via the broker platform, that you're delivering good data over there so that the employees can see it. And you'll be introduced to the world of SOX and SEC filing deadlines, which that in itself is a whole entire presentation, but things to be aware of that will be coming in the near future. All right, we've got 5 minutes for questions. I'm sorry we don't have more time. We will get to as many as we can, and any that we're not able to get to, we will we'll answer those directly through email. So,
well, the good news is, I think, Madori, that we've got one active question, and it's a very good question that I don't have a very good answer for. Maybe you do. The question is, do we have like a general guideline or handout that can be sent to the payroll department to make sure that equity transactions are taxed properly in payroll? So ISO versus non-qual versus disqualifying dispositions. And my short answer is I don't have that, but also it's a little more complicated than just having. I'm sure the NASPP has one, and I'm sure that we can go back and check and see if there's anything that we can provide and send that out in an email. But in addition to just identifying things like a non-qualified exercise is going to be taxed as federal income tax, Social Security, Medicare, it's important to talk with payroll about what those codes are. Because keep in mind that payroll doesn't speak equity comp. Sometimes they will, but odds are they don't. So it will be more important to identify not the equity type, but the resulting income type. So there are going to be there's 3 kinds of income: federal income, FICA, and FUTA. And that's payroll language. So again, as you're getting this different administrative mindset in place, keep in mind that your payroll team has a different nomenclature than your equity team. And bridging that gap is important. So while we will go back and see if we can find a good handout or a good summary of the kinds of income and resulting taxation that you could provide to your payroll, I'm not sure that we'll have one, but we'll definitely take a look and follow up in email, but also to stop and talk with your payroll about the nomenclature that they use and the way in which they want that delivered, because they're not necessarily going to care what kind of transaction has taken place. They're just going to need to know that they're going to have situations where in a disqualifying disposition, for example, there is income but no withholding. And that's a whole new ballgame for them. So it is important to stop and talk with them, but they don't necessarily need to understand and may not even want to understand the transactions behind them. They're just going to want to know the income type and the tax withholding requirements. But I didn't see any other questions. Do you see any other questions relating to the presentation, Madori?
No, I don't. So, Shauna, I guess we'll turn it back over to you. And again, I thank everybody for joining us today and listening about going public. If you get that opportunity to do it, I say jump at it. It's a lot of work and has its stressful moments, but it's very rewarding at the end of the day once you get through the process and start trading. It really is.
Great. Thank you, Madori. I'd like to thank you and Rachel who joined us today, and thank all of you for attending today's educational webcast. Please do look for an email in the next few days with links to the recording of this session and materials. Thanks so much and have a great day. Bye-bye.